Welcome back to the programme. Great to have your company. 5:36 is the time. And the subject, mortgages. Britain's largest building society has made some mortgages more expensive as the Bank of England's interest rates now expected to rise higher than previously thought. Nationwide has said interest rates on new fixed-rate mortgages will rise 0.45 percentage points. And this follows moves by lenders like Halifax, Santander and Atom Bank, who also upped their rates by up to 0.2 percentage points this week. Joining me to discuss it is Sally Mitchell, mortgage advisor at the Mortgage Mum. Hi, Sally. Thanks so much for joining us. Good to have you on board, Sally. So this is obviously very worrying for some people in a particular mortgage situation right now.
Yeah, it just seems to keep coming, doesn't it?
Yes, it does.
I was out last night at an awards do, an industry do, and I thought Friday, brilliant, nice quiet day, finish everything off, and then this has sort of hit the fan. It's incredible, and it's not just the big lenders who are upping their rates as a result of the inflation figure that was released. My inbox is groaning with lenders saying that they're basically retiring from the market for the next few days whilst they reprice and relaunch all their products. And you can bet your bottom dollar that those products, when they're relaunched, will be at a higher rate.
Right. And so that bodes really very badly for anyone on the verge of taking out a new mortgage or anybody whose mortgage for their fixed rate has run out. So what's it looking like in terms of, price hikes? How much more are you having to pay for a sort of average type mortgage than you would have done before?
Well, there's a little hack that I like to use because it's, figures are confusing. They're confusing for mortgage brokers. They're going to be doubly confusing for, your clients.
Yes.
So for every percentage point increase on £100,000 mortgage, you can look at paying another £50 per month.
Right. Okay.
Monthly rate. So if we go up by 2 percentage points, which we have recently, and you have a £200,000 mortgage, to remortgage that product or that loan, you are going to be looking at paying at least £200 a month more. Obviously, if you have £400,000 on a mortgage, which a lot of people do, it's £400. So it's a lot. It's a lot to find. And as we've heard today and in the last few days, inflation, it is coming down, but food isn't.
No.
That's the sticky wicket that seems to be stopping us getting to our target.
So have you started to hear from people who are saying we can't pay, or are you starting to hear from people who are saying we're worried that at some point we won't be able to pay?
Yeah, it's the worry. It's the fear of the unknown as well, because it's a movable feast. It keeps changing. Only a month or so ago, we were seeing fixed rates coming down, which was fantastic news after all the uncertainty and insecurity. And then swaps started to rise again, and rates started creeping up. And now this is like a double whammy. And as you say, some of those rates are going up by 0.5%. It's an awful lot. And if you're not in the situation where you can actually secure a rate now before goodness knows what's going to happen, it will probably get worse before it gets better. You really are stuck between a rock and a hard place. And I feel for the people. So
do I. How does this all fit in with the conversation you and I had not very long ago at all, maybe 3 weeks ago, maybe 4, it wasn't long, about the 100% mortgages now available? Because those two stories, one, mortgage is going up, frighteningly high for people and certainly very worryingly high. With 100% mortgages, those stories don't seem to sit comfortably hand in hand, do they really?
No, and they are two slightly different things. I mean, the 100% mortgage product that was launched was actually, I think, 5.49%. So it was still quite a high rate, higher than we'll see a lot of the lenders coming back onto the market at. And that builds into that rate, the risk of basically lending 100% of the property price to a borrower. And that was really to encourage and to help first-time buyers who find it so difficult to save whilst they're spending money on rent, to get onto the ladder. I think it's still a really, really good option for a lot of people. But it has to sit side by side with the market and the influence that has on rates for the vast majority of mortgage holders.
Is there anything you can say to the people who are starting to get nervous and anxious about this? I mean, apart from don't worry, and you can't really say that because you can't predict the future. Is there anything you can advise them, or anything you can do or say? Or is this just one of those you somehow got to tough it out and wait stories, which is going to be possible for some and not necessarily for others?
Yeah, there is an element of that. I mean, if only I had a crystal ball, it would be amazing. First and foremost, get a broker on your side, get some good advice, get somebody who knows the market, who has access to all the lenders, who can actually tell you what's happening in real time, and get all your ducks in a row, get everything planned, get as mortgage ready as you possibly can. And again, your broker will tell you what that entails. But you can, most lenders will let you secure another product 6 months before your current fixed rate comes to an end. So if you're thinking, crikey, if this goes any higher, if these get any bigger, these rates, then I'm going to be in trouble. I don't like the look of the landscape.
Yes.
Then try and secure a product now, knowing, and this is what a broker will tell you, that if things change, if things improve between now and when your rate ends, you can ditch that rate and then secure a new one at a lower rate.
Yes.
And not everybody knows that. It's not set in stone until it actually transfers over. So, and with some clients, I've done 2 or 3 different rate switches in that period of 6 months between being able to move and actually coming to the end of the product. So that's worth knowing.
What would be your overview of the property market now? Would you say that it is volatile, unpredictable? People are reluctant to sell, people are scared to buy, and the whole thing's in a sort of stasis. And this is not a good situation. Or would you say that surprisingly it's more stable than you would have thought? What's your perception of it right now?
Exactly that. It is fundamentally stable. It's a good market. It just has fluctuations like everything, and there will be times when it's more prudent to perhaps pull your horns in and not go for the big upgrade in your property because it's going to cost you more. Obviously, there are times when that's not possible. You have to move for family or business or work.
Yeah,
and I think you've got to do what's right for you. I see a lot of people moving. Weirdly, in the last month, we have had more purchases coming through, and that was certainly something that was reducing in the market. People were not moving; they were too scared. They didn't want to move, and they're sort of saying, "Well, do you know what? How much worse can it get? As long as I can afford it." Well, yeah, exactly. How much worse can it get? As long as I can afford it, I'm going to go. Because what we've got to remember, when you look at a mortgage, quite often it's 25 years. So that's a very long time to manage a debt. And like anything, there's going to be times in those 25 years where you're paying more for the privilege. And there's going to be times that we've just come through where you pay less. I always say it's like my trips to, let's say, Spain. If I go outside of school holidays and when the weather isn't quite so scorching, I pay a very low plane fare. If I choose to go perhaps when it's school holidays and it's the summer, I'm going to pay a lot. But if I look at it over the average of my year trips to Spain, it averages out. Yeah. So the key, it all comes down to affordability. You've got to make sure that you can afford the payments as they are now, and if they're stressed and they go up higher. It's not pleasant to pay more, but as long as you can afford it, it's just, I think, something we have to accept. It's part and parcel of having a mortgage on a home. Thank you so much for joining us. Always a pleasure to have you on, even if what you're saying is really rather unnerving. We appreciate it. Thank you. That's Sally Mitchell, the mortgage advisor at The Mortgage Mum. Coming up after the